Trading gold shouldn't be random. Should be easy, like making pancakes, bro. So anyway, just a little quick replay right here. So I want us to look at gold and what happened here during NFP. So the first thing that happened here on gold, right? The first thing that happened here on gold, and we're also going to look into what to expect in the following week. So pay attention, because most people really can't pay attention. So let's see. Gold started by breaking structure here. That's the daily time frame. This is something that's very, very, very easy to understand. This is the daily time frame. We broke structure here. I don't have to go back to 1980 to look for what gold did, right? We're looking at what's happening now. So you can clearly see we broke structure there, or you can look at it from this high right here, if that's visually clear to you, or this high right here, right? And then stop hunt right here, then break of structure. Fine. So after breaking structure, we have this liquidity right here. This was Monday, right? This was Monday right here. Monday, Tuesday, Wednesday, Thursday, Friday. So whenever we have an area of liquidity, you have to find an area where you're going to find support from, right? So this is an area that you would normally find support at, right? And open close. I'm not quite sure whether we did tap into this area. We didn't, right? And I think most people are expecting it to come back here. But if we do come back to this area again, we're not going to use this very same zone. Why? We have a new zone right here. And then this one can be liquidity, right? This one can be liquidity right there. Then, assuming with what has already unfolded, right? Working with what has already unfolded, we can see price eventually found support somewhere in here, either on a lower time frame, right? Then from there, we created a sell and then a buy. This is a new area of support, right? Then this was Thursday. Thursday traded into this area of support right here. Traded into this area of support. The reason why I was still expecting buys is because this high, right? This open close right here, it's not the one which we would pay attention to on a higher time frame if we are actually looking for a sell. Why? Because we look at these top areas right here. The last two areas that we formed before selling lower, or before trading lower, or before breaking structure, right? These are those areas. Then when Thursday traded into this area, we mainly just wait to see where it makes a low and find support in here. Normally what I just do, just mark the 50% right there. You can clearly see we did not tap that 50%, which is still fine. Lower time frames are there to aid us in finding the correct support levels when we do refine, right? So we're going to go down to the 4-hour now. So remember, our target is this one right here. Our target is that one. I want to keep this very short, 10 minutes tops. So 4-hour time frame. On the 4-hour time frame, the only levels that we had here for support was this one and also this one right here, right? These are the areas of support that we had. Thursday traded into this area, created an area of support right here, and then mitigated that area of support, mitigated that area, right? And then we had this open close left behind, right? So during London open, during London, we can clearly see that we traded into this area, this open close, but we're going to zoom in and try and find the correct area to buy from. Try and find the correct area to buy from. Because we clearly understand that we have this area as a potential target right there, fair value gap right there. This one is that traditional SNR level. So we're gonna go down to the 1-hour time frame now. So here on the 1 hour, let's look at the structure. Let's look at the structure. Nothing clear right now. can see here on Friday we just traded high. Thursday it closed somewhere around here. Around here, right? This is when Thursday it closed. On the 1 hour, the only area of support that we had was this one. If you came from the 4 hour, right? The 4 hour, you marked this level up. And it's also a fresh level, but I won't mention it. I'm just showing you the basics because this is something that someone taught me as well. So I don't want to teach it yet. But this, whatever that I'm going to show you now is going to work. So you can see the 4 hour, you have this fresh and unmitigated zone right here. And then this is that open close that you had, right? So you have liquidity right there, but we're going to go down to lower time frames first right now. Usually the time frames that I look for setups are the M15. M15 is my best time frame to look for trades, right? So when we were here, I attempted a buy and then price traded higher, right? Price traded higher. Not quite sure whether I was still in this buy or not. Not quite sure whether I took this buy. I'll confirm. And the main reason for that was that we traded below this area, right? To create a stop hunt. So let's go to the M15. We're skipping the M30. So from the M15, this was liquidity right here. We have a potential area of support right there. Area of support right here. Another area of support right there, which we didn't trade into, right? But we have a fair value gap here. Mainly marking up these levels. You should wait for a reaction, right? You should wait for a reaction to see what price is likely willing to do. So if you had marked up these support levels initially, right? The main thing that you wait for is price to give you a QM pattern and then you buy, right? So that's what we're going to look for. That's what we're going to look for now. So price traded into this fair value gap here on the M15, right? After trading into that fair value gap, I want to highlight it like this so that it's much more cleaner. After trading into that fair value gap, what did we do? Created a stop hunt right here. Structure break happens here, right? But we'll highlight it up until there. And then we are going to look for liquidity. If you were here, you would have marked this area as liquidity. Where is your potential area of support? Let's look at it from the standpoint. Don't be distracted by that other price movement. This would be your liquidity right here, right? This would be your liquidity area of support right here. Why? It's a fresh and unmitigated level. You can either decide to have your stop loss below here or extend it to this one, right? To this level, but we'll just highlight this low just to see whether you would have been safe if you had your stops there. Then you can see price then engineered another area of liquidity right here. Then it tapped into that area right there. If it's 50 pips, it's worth it. 39, 40 pip stop loss, let's say. 40 pip stop loss, and then you target that area right there. Very simple. Make sure that you practice this. I'm not going to make the video very long. Share it with friends. Follow me on Telegram. Click the first link in the description and also subscribe if you're new for more content like this. Let's get to 100k subs. If you like this video, make sure to leave a like. I'll see you with a good reaction. Leave a comment as well. Peace. Beautiful, beautiful.